Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, October 19th, 2018. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll notice here is we had a major shakeout leg in the previous session. Remember, we were talking about the previous midpoint and the low, and I mentioned that price can get below there, but bulls have to be able to defend and reject and trap those lows. If not, it could get ugly. And it certainly got ugly here as price really dropped back down. A major shakeout leg, and this is not uncommon. This is not uncommon. As a matter of fact, we may see this more over the next several weeks. Push up, chop back, push up, chop back. It's very similar to what we saw earlier in the year back here, where if you get a major sell-off like that, you'll get this significant bounce back toward that midpoint, like we've already seen in the NQ. We hit the target, didn't quite get the target in the ES just yet, and then you see this major shakeout leg down before it came back again. It's very similar to that type of price action. Even here, major sell-off, you get the bounce back, and then quickly you get a shakeout and another bounce, a shake and a bounce. And so again, that's very similar to the price action that we're seeing here in the current market. Now, this is a very important part of the chart at the moment, because we could see another sweeping day downward if price cannot get back above the zone right where it is now. This is the breakdown point from the previous session. This was prior support. That was the breakout point here. It was all this. It's not going to stay here. This is a spot where bears are trying to keep offered for a shot at dropping it down another leg. And if it starts to go downward, again, you know how the algorithms are. They're going to pile on each other, and they're just going to turn into a significant day. So again, we could easily retest these lows at some point here, as this was a decent, strong enough low to get us for a bounce. But overall, it's not so strong that we can't come back and get it. So this could be a significant day to the downside if price cannot reclaim these 2783s. This is a spot where bears are going to try and keep offered for a shot at dropping this thing back down. So it could get interesting here. I'd be very cautious, because again, we could continue to see this whipsaw back and forth before another major directional move occurs with some sort of confidence. So this right here could be very significant, so keep an eye on it. Here's a look at the NQ. Very similar price action. Here's the NQ again yesterday, trying to hold the 7200s. I mentioned before, 7200 was very important. Bulls were going to want to defend that level, and they gave it up, and it became a stop run day through that level. Right now we're bouncing back to it, and you can see it's trying to test 7200 from below. It's at 85.5 right now, and again, if that level starts to become resistance early today, we could see this thing melt down again and try for 7,000 maybe. Right? So right now, over the last 10 sessions, this is the average daily range on a 10-day basis. Over the last 5 sessions, it's 187.55. Right now, our range for the day is all of 60.5 points. Right? So if we're going to get anywhere near the 187 to 205 points that we've been averaging over the last 5 to 10 days, we've got a lot of range to go, because we're only trading 60 points right now. So is that range going to be to the downside, or is it going to be back to the upside to take out these highs? I think we have a lot more range to go. We're only trading 29% of ADR. Again, could be a significant move here into the close of the week. So keep an eye on 7200. All right, let's take a look also at crude oil. Crude oil had a significant move lower over the last couple of days. Today so far, inside day, trading inside the previous session's range for the most part, trading the lower half of the previous session's range. Again, every pullback is likely to be a selling opportunity right now until we hit the lower edge of that channel. We have an LVN that comes into play right here between 66 and 67. That's also at the previous month's low. It's a very clear rejection point there for this market. It doesn't want to quite trade that level. Instead, it rebounds off of that zone. So again, that is about the 66.75 to 67 zone. we could still be headed down to that area before we start to see some sort of semblance of strength. Eventually, we could see that bounce back up towards 77s given the channel structure we've discussed throughout the week. So today, keep an eye on this zone right here. Again, if there's a failure to hold above the previous session's midpoint, which is 69.26, that could open up more selling pressure on a day time frame basis. All right, let's take a look now at gold futures. Gold right now continuing to hold above the breakout point of 1220. That's very important. Again, this market has not been able to really bounce much here recently. I've discussed that at length here in recent weeks, and even now this move up was basically a one-day move, and the rest has been sideways. You take that move out, it's still sideways, right? So again, I've mentioned before that bulls are doing just enough in this chart to keep it mildly bullish at the moment. They've been able to maintain that low. They've been able to defend on this absorption zone here. They've been able to break it through 1220, and now they've been able to hold it above highs. But even all of that can still lead to a failure back down if we don't start seeing more strength here, because all of these late longs here will start to bail back below 1220, and that could lead to a stop run day right back down to 1190 or even lower. So again, this thing is doing just enough to remain bullish, but any failure to hold 1220 could be an early signal of weakness. All right, lastly, let's take a look at the YM. The YM right now is doing the exact same thing that the ES and NQ are doing, but I wanted to provide the level here. Again, the previous session's midpoint is the key level there. That's 25,472. Price is trying to test it from below. You can see how it's been a key level all week long. It's either resistance or it's support. And right now it is short-term resistance after yesterday's weakness. If we can't get above that zone, that's when this thing could melt down and retest lows. Above that area opens up, again, a retest of yesterday's high. So right now, a very important level. Again, continue to watch 25,472. And you know what? One more. Let's go with Bitcoin here. Bitcoin right now continues to hold. Again, I've mentioned that we are in a descending pattern here, and we are also holding 6K, and we're hanging on for dear life right now. We have that VPOC right there, which is basically 6,500. So composite VPOC 6,500. So we are at value right now, and there, because value is here, bulls have they have a whole lot of interest in keeping value bid and keeping 6,000 vid, and hopefully they are looking to take it bid here in order to climb higher to recent highs and recent HVNs up above. Overall, this market again has to prove it, and it hasn't been able to prove that it can push above a prior pivot high in nearly a year. And I've mentioned that from the very, very beginning. Ever since we had the sell-off here, we knew we'd get a bounce back, but that was a point to sell it. And ever since then, it has been lower high after lower high after lower high. At some point, something's got to give, and that's why I mentioned that the next breakout move could be significant. But in order for me to believe it's going to be to the upside, it just has to prove it. It has not proved it yet. And so again, in most cases, when you're talking about a normal market, this thing would normally shake out to the downside. And when that happens, you start targeting the next key range targets down below. And 4,400 is my next one down. And again, that's been on the board ever since we've been hugging this level forever. And again, I've also mentioned the one below that, which would be 2,100. That would be the 100% downside target. That would be the worst case scenario almost, other than going to zero, I mean, for a lot of cases. So I mean, this could be a very, very significant target, because once 6K gives out, everyone will run for the hills, right? And that's usually what happens in normal market scenarios. So again, wanted to give some of the levels. If it were to break above these 69s or 7Ks, right, it still would need to challenge these recent highs in order to really make it worth it. That would be 7,500. And if that were to be the case, then I think you easily get this next level up here, which would be 8,500. So a breakout could at least get you up toward 8,500. But again, it has not proven to be able to do that. and so it needs to prove it. Okay, that is it for now. We'll see how this plays out heading into the weekend. Good luck, trade well, and I'll see you soon.